Hello and welcome. My name is Oscar from the Finance Society at Stockholm Business School. Today we're going to talk about bottoming tails and topping tails, also known as shooting stars and hammerheads, I think. Different names, same pattern. It's a really good pattern. It's a great pattern actually. And the general gist is this is a bottoming tail. This is a topping tail. So in the bottoming tail example, we have a stock coming down from above, of course, forming this bottoming tail, signaling that we're going to turn and gonna go up again. Same thing with the opposite thing with the topping tail. We're climbing up, forming this tail, signals that we're gonna go down. Some basic rules for this these tails. You want them to be big tails. You want to notice them. You want them ideally to be at the end of a chart, at a new high, on a new low, and not just somewhere in the noise of the daily trading, I should say. Some basic rules: you want a big stick, big wick. The body should be small, preferably. The body needs to be in the let's start with the bottoming tail, in the top 50% of the candle, of the whole candle. The body can't be in the lower 50%. That is not valid. The close needs to be in the top 25% of the candle. This bottoming tail can be a red candle. So we started here at the top of the green one of the day, and we closed in the bottom because it's still closing in the top 25% of the whole candle, and the body is in the top 50. Same thing with the topping tail. We're coming up. We trade up over the day or over whatever time frame you're trading. We go down. The close is in the bottom 25%, and the whole body of the candle, not the wicks, are 50% in the lower 50% of the whole candle. So I thought we was going to look at a couple examples, and we're going to start off with GMCR. Here we go. We're going to start off by looking at a failing closing topping tail, just to show you, as always, stuff doesn't always work out. Here we have Green Mountain. I think they do coffee, I'm not really sure. Trading up from 20 up to 150. At this point, we don't know what's coming afterwards, so this looks as this is a new top of the charts, as we can see. Haven't been trading here before. We have a good up day, a surge, and we trade back down, and the body is in the lower 50%, and the close is in the bottom 25%. So this is a valid topping tail that didn't really work out. There's two ways that I trade topping tails. The first one, let's just draw one here real quick. Here's your topping tail. So either, like here, you just buy it the next day, and your stop out would be any stop. Remember, stop, not just going above, stop over the high of the tail. So any stop over up here would be a stop out. So either you just buy it the next day at this level here, or you wait it to retrace this topping tail. It sometimes does, like here, you could buy it, like here. Because, as we said, we stop out if it closes above the tail. And by letting it retrace, the risk you're putting up is significantly smaller, because it's half the risk. If you let it retrace 50%, you're gonna risk half as much. That means you can take double the amount of shares, which double the profit. Sometimes it will not retrace at all. Then you miss the trade. So it's up to you if you wanna wait for the retrace, or you just gonna be really quick and and risk the whole candle. Gonna look at a couple more. Where's my thingy? There. Lululemons. Is this a top ring tail? Here. I would say no. Why not? Because again, big candle, bottom 50%, close in the bottom like 3% of the candle. All good, but it's not at the top of the chart. It's gone up and it's been going sideways, and now we get this top tail, which isn't the top tail. If this top tail would have been here, would have been here, that would have been great, awesome trade. But just because it's not top of the chart, it's not valid, and you're not going to use it. Let's look at another more. Alpha. Alpha Laval back in March 2012. Here, starting here, going all the way up, going all the way down. The body is in the lower 50%, the close is in the lower 25%, and here we have an awesome retrace. This is a great trade. So let's say you get in here, you have an entry at 184. Your stop out would be any close above 187.10. So that's a 3 kroner stop out, which isn't too much on a daily chart. Yeah, and what you do is you take the whole topping tail candle, you move it to the bottom of the tail, or the body in this case, and you measure at 168. So that would be like 17 kroner profit, or potential profit, and your risk would be only 3. So that's a risk reward of a bit over 3, which is generally good. Of course, this is not a hard stop, because I said any close over this top. So of course you can go bust, but if it's really strong, moving up, then of course you need to stop out because you don't have unlimited money. But if it just inches above, don't panic. It usually comes down. But sometimes it just surges, and then you just have to be the bigger man and just stop out and take a loss. It's no fun, but something you gotta learn. So there's some discipline needed for this pattern. We're gonna look at BMW. Here we have it. Again, I'm looking at this candle here. It's not really the absolute bottom of the chart, because we have been trading here before, but it is at a significant bottom in the short term. So we're going up, sideways, and down. There's a lot of empty space here, so it's a bottom. It's not the perfect bottom, but if you only trade extremes, new highs and new lows, then you're not going to trade very much. So again, the candle is significantly large. The body is in the top 50%. The close is in the top 25%. Here you don't get a retrace. So if you want to play this, you're just gonna jump in the next day, or when it's consolidating here. But you're not gonna get a 50% retrace. So if you want to play the retrace game, you're gonna miss this one. But you would have caught the Alpha Laval, and that would have been an awesome trade. And we're gonna look at the last one. Deutsche Post. Here it is. Good bottoming tail, really good bottoming tail. Again, not at an extreme low, but as you see, a lot of empty space here, a lot of empty space. So you got to trade this. Again, big healthy candle. Body is in top 50, close is in the top 25. Again, no retrace. So in this case, if you buy it the next day, you have an entry of 22.44, and any close under 21.55, That's almost 4.5% stop. So that's a pretty big stop. And of course, if this just surges down, you might get stopped out at 18. But here is where you need your discipline to, and your gut feeling to know when you're going to stop out, when it's a strong move and when it's just a weak move. And of course, you can start looking at, okay, here's some support. Here's some support. Where is my limit? What line can't it cross before I sell? But again, you risk this, and you don't really have to sell it after the calculated move. That's just a guideline for this pattern, but this just trended. So just be ice cold, and after this you break the 20. That's a good indicator. You break the 50. You get support at the 20, and you just keep going. Of course, it's very easy in hindsight to see. Of course, I'm going to keep it from 20 to 30. Of course, you don't know that, but this whole pattern is an indicator of that we're gonna just flip the switch. So if we're going down, we're gonna flip the switch, gonna start going up again. So this is a great pattern with great risk reward. Very easy to spot, and yeah, it's just an awesome pattern. Hope you learned anything. As always, see you next week. Have a good one. Bye.